I'm Debra Borchardt, and this is your midday market update. All the indices are pointing down right here in the midday hour, but volumes are not terribly heavy, so as you can imagine, we are in a holiday trading mode. One thing that is doing well are dividends, because we have seen Boeing increase their dividend a whopping 50%. 3M also declared a dividend, so it's the season of giving with dividends. And joining me now is Keith Bliss from Cuttone. So Keith, looking at next year, we all expect that bond yields will go up as a result of the Federal Reserve backing off. Does this make it a less good picture for these nice dividend-paying stocks?
Well, it's interesting. So the decision between dividend yield and bond yield is one of simple math, and you have to really look at the after-tax math behind it, because dividends are taxed at 15% still. And if you were to buy U.S. Treasuries, for example, you're not taxed at the federal level, and it's a risk-free rate of return if we assume that the U.S. government will continue to pay their debt. So there's a lot of calculations that need to go into it. So you mentioned too, Boeing and 3M, even though they increased their dividends dramatically, the after-tax dividend yield on their stock prices, because they're trading so high, is still less than 2%. So even on today's yields, if you're shopping for yield, it's still not as good of an investment as the 10-year Treasury right now. And you're right, if we anticipate that the 10-year will go up to 3% and normalize around 4%, the before-tax dividend yield that you'll need to get on any stock is around 4.7% if the 10 years at 4%. So that's a hefty notion. So again, Boeing and 3M, they're looking for ways, they're searching for ways to give money back to the shareholders. Stock buybacks, even though Boeing announced an extra $10 billion into their buyback along with that dividend increase, stock buybacks are not a real good idea right now, because everybody's stock is trading at almost all-time highs. So you're not going to get a lot of bang for your buck. So again, dividend yields, you'll get different perspectives on it, but a lot of times, not dividend yields, but increases in dividends, especially massive ones like that, it's almost a gimmicky marketing thing to kind of appease the shareholders, so the companies look like they're giving something back to their shareholders.
All right, well, maybe some would think that a better use of that cash would be to hire people and grow within organically. That's Keith Bliss from Cuttone, and I'm Debra Borchardt with TheStreet.